All right, good morning, everybody. One broken rule, trail fail. Trade fail, one broken rule, lucky. One rules, mad easy trade. Funny how that works, huh? Good morning. Good morning. Good morning. How you guys doing today? You guys feeling good? You ready to do it? Ready to knock it out? Which should I continue to do? Wayne, be careful, man. I'm behind the pulpit on a rant today. I've been doing so much study behind the scenes lately. Um, so much study behind the scenes. And I'm going to tell you guys, I have discovered what I would consider to be a gospel truth. Um, and some of you may agree with me, some of you may not. The gospel truth appears to be, for all intents and purposes, if you follow a plan, I know, right, Ron? If you follow a plan, you can begin to create expectations for your trading, right? Good morning, Chariot. If you follow your guts, man, my guts get upset a lot. My opinions mean nothing. Guys, we're going to focus on the whys, right? So check it out. Market reversed out of nowhere. What does that mean? That means that's a weak top, which means when you get to this mid-band area, things could go back up. Pete knows that. Separation between the small and large. This is the clinical definition of momentum. So this is a market that's no longer going up, that has changed direction, that is going down with force. And Pete says, check it out. I'm going to jump in right at an area in this retracement zone. And the one thing that Pete knows is that his stop to be where the market shouldn't go is going to be, that is $300 per contract worth of risk. Pete accepted his $300 worth of risk per contract, $600 worth of risk on a trade after the market had been screaming up for the last hour and a half. He gets in, he gets paid, he gets out when things don't just continue. There we go. Guys, this is not a high probability. Well, actually, you know what? Technically, it is a high probability trend trade. It has momentum. It has nothing in the way. It has a pullback to an area inside of triggers and profits taken. Fits the plan. Nice job, Pete. Strong trending market until a blip. So we're going to address this one. If it's a strong trending market, it is 30 plus bars in the same direction. If you get a reversal bar, don't even mention the strong trending market. It doesn't exist anymore. So what you have is weak triggers and only the potential to break with weak triggers. Does that make sense, Pete? It's no longer a strong trending market. It's weak triggers. You're getting in below Fibonacci. You're coming off of the midband from the wrong side of the triggers, but you're saying with everything down, with my triggers facing down, with everything below Fibonacci resistance, things are likely to go down, and they do, and you catch it, and you get out with a little loss of momentum. And then you say, you know what, let me wait for a better look. Let me wait for a little more of a clear path as everything heads down, gets below the fib. Pete gets in below the fib, makes a little money, gets out. Not a high probability trend trade. An awesome chart read. When triggers get through an area, the area is broken. Support becomes resistance. Look at it. He gets in from resistance with every indicator down, down it goes. Fantastic. There's that momentum again. Strong top, momentum. Let's see, I'm trying to line it up. 18. Once again, the potential to break this divergence low. Triggers are through. All the momentum. Pete just jumps the fudge in. He even says it. Jump the fudge in. Everything is screaming down. Let's hope stuff goes down. And guess what? It didn't. His momentum jump in fails and becomes the perfect trend trade. Pete understands the perfect trend trade, so he doesn't panic. He holds. He knows that that area is likely to create a bounce and is able to get paid. Nicely done, Pete. It's actually 2 triggers through though, right? So Pete, I'm going to do an observation. You love to point to where the market is now instead of where the trade came from, right? So where the trade came from was 2 triggers through. And I think that that's important because when you're taking the trade, you know what it looks like. But after the trade, we like to annotate it to make it sound like it was just a little bit better than it was. And that's okay. 2 triggers through, strong top, jump in with momentum. When momentum fails, turns into the perfect medium probability trend trade. And sure enough, it goes down. Great job, Pete. But guys, one of the things that happens is we all have things. We all have things that we do. Some of these things bring us amazing levels of success. Some of these things hurt us, and we tend to repeat them. Some of them just have no play whatsoever. And Pete, your thing is annotating after where you get in. So weak bottom, momentum, and at 12:31 back here, you've got 2 triggers through, and you take the pullback to the mid-band inside of triggers. The market pushes all the way back to the lower area of support inside of triggers. That's okay. Pete knows exactly where the market shouldn't go if this is going to be a successful trade. And sure enough, it's a successful trade, and it's all rooted in momentum and having room to trouble. And that's a great hold, Pete. Nicely done. Everything says up. There's nothing in the way on the large chart. Now it's a strong trending market. 30 plus bars, nothing in the way. Pete says, I'm going to jump the fudge in and hope it makes the fib. And it did. It did make the fib. Nicely done, Pete. Momentum and path. We're going to talk about all these things, but I wanted to get through these reads first. All the momentum, separation, smalls below the large, life is good. Right here at 40, there's a Fibonacci area. It hits it. There is nothing that even resembles a clear path for Pete. That's okay. This is Pete's plan. Pete says, man, when the market is screaming, even if I hit a fib, if both charts are screaming, if there is no divergence, I'll take that entry. I'll manage it assertively because one of my advantages is gone. And if they don't blink at trouble, I'm going to make extra money. Guys, this is what we're going to talk about. And I'm going through and I wanted to do these first because I'm going to show you that when you learn how to read the software, there's so much opportunity. Until you learn to read the software, you're guessing, you're hoping, you're wishing, you're wanting, you're praying, but you're not using the advantage that Nexgen provides, being able to recognize advantages and turn those advantages into trades. All the momentum directly into a termination condition. Divergence prints from the termination condition, which is the biggest red flag ever. Pete takes the trade based on momentum. And again, we're pointing not to where the trade is, but the really good look before the trade. There's your trade. 2 triggers through. Perfect entry. Stop where the market shouldn't go. Out at trouble. Outstanding, Pete. Medium probability. Not all the advantages we're about to talk about. Same thing. Right into trouble. He takes it anyway. He gets paid. Guys, you have to make the decisions on whether or not you want to trade directly into problems. Pete loves to trade directly into problems. It seems to work out. I don't know if it really does. I can't see his P&L. I've never seen a loser from Pete. If I have, it's been a long time. I have to assume from what he posts in the room, he wins 100% of his trades. No matter how many rules he breaks, he appears to win 100% of his trades. Now, when I was in high school, I used to brag about things that didn't really happen too. I think we all did, right? So remember, guys, if you're posting in the room, the winners are awesome. Everything says down, jump in, get paid. If you're not there, if you're not at Pete's 100% winner rate yet, guys, you should post in the room And you should talk about what it is you see. You should talk about your rules, right? Hesitated on entry due to prairie dog look. That's not rules. That's what's going on in your head. That's an awesome description. But what do the rules say? The rules say, if you're following the plan that I give you, that you're only looking for longs and you have room to targets and there's a pullback, but you don't have an area to trade from. And because you don't have an area to trade from, because it's directly into resistance, I love that you didn't take the trade. But guys, everything can go back to rules. Everything can go back to a plan that has been proven to win more than it loses. Everything can go back to a pattern that you can prove wins more than it loses. Triggers are down. You had room to trouble. You trade directly into trouble. Very little room. I love that you get paid. You made $180 trading into a zone. You get out at the one-to-ones because you know you're trading into trouble. If you weren't worried about the trouble, you would have held for the bigger targets probably. But that's okay. Did you know you traded into a zone? That's my only question. Did you know that that area could have stopped the market? Did you know that that area would be a reason to manage? That's my only question for you guys when you break rules. But point out, right? Prairie dog is not a clear path. So, Paul, does your plan say I will trade into zones? Didn't see the VWAP. But what about, okay, so let's give a lesson on TradingView real quick. And when we talk termination conditions, guys, this is gonna work for you. Do you see the zone right here? Everybody sees it, right? When price breaks above that zone, this zone becomes support. And that zone has an amazing chance of doing that right there because it's support. So until the market breaks below the zone and pulls back to it, it remains support. Does that make sense, Paul? And there is a VWAP there as well. But what we're doing is we're trading directly into an area of support, hoping that a little peek of the head is enough to make it work out. Now, I won't tell you how to trade, Paul, but when I talk about identifying the things that are bringing you success and the things that seem to cost you money, that's your thing that appears to cost you money, right? But we get caught up in the moment. So I encourage you guys, do whatever you want to do, but write your rules on there, right? The dissertations are great. I love all the thought processes, but somewhere on your chart, write out rule 1, rule 2, rule 3. Let them be separate of all of this, right? Talk about, was it met? Did I have it? Does it follow a plan? Does the plan prove to win more than it loses? Guys, if you get into this habit, you're going to find that trading magically gets easy. That trading magically is stress-free. Triggers are up, right? Let's talk about them all the way up. 3 triggers through. Odds favorable momentum. Hey, Cav, good to see you. Pull back to the area inside of triggers. Easy money. Nice trade, Pete. Triggers are down, right? Didn't enter because of trouble. I love this. Jerry, how do I use the 1 minute, the one-to-ones on the 1 minute, pink and yellow? Don't trade into them. Trade from them. They're brick walls, Jerry. That's it. They are brick walls. I don't care what color they are. Don't trade into them. Trade away from them. Right? We gave this analogy the other day. And let me know if this makes sense. I want to trade to trouble, right? I want to trade away from trouble and I want to trade to trouble. I don't want to trade into trouble. So if I'm walking towards the door, I'm trading to the door. If I walk into the door, my nose hurts. And guys, that's what all of these areas are. All of these areas are a big solid door that you don't have to trade into. Look how often they hold. So Paul, great job not taking a trade into the area. Nicely done. Rule number 2 not met. Chose not to take the trade. I love it. Wayne triggers up. Room to targets. Let's see what happens. Bar closed above to look for momentum, but there was no momentum, right, Wayne? So you can't do it. It's still resistance. And then as it pulls back, you entered on the way up. Wrong side of the triggers, but it works out. And then you jump in above the zone, and it works out. Entered back here above, away from the zone. Again, did not wait for close above triggers. Got lucky this time. Market did not continue down. Directly into resistance, right? Putting a lot of risk on a trade. Initial stop here first. Small loss, avoidable since it did not wait for the bar. This is such a good chart, guys, and these are great charts to do. Let me go through. Bar closed above, look for momentum or trend trade. Well, you don't have rules met for either, right, Wayne? There's no entry. There's no momentum. Can't be a momentum trade. We talked about that yesterday and had a good giggle. There's your pullback to the area. There's your close above, right? So broke rules, got lucky. I love it. Get lucky, guys. Getting lucky is fun, right? But the large chart always said, let's look for up. So letting the large chart lead the way. Good job, Wayne. Momentum trade with an add-on. I didn't see that in there. Momentum trade without rules met. I don't see a momentum trade anywhere, Wayne. Do you? I want to make sure that I'm reading this right. Are you referring to this trade as a momentum trade? Maybe he's off fixing cars. Guys, you can't have a momentum trade without momentum. It's impossible. What you have here is I hope the area holds trade. I sure hope it goes up because I'm above an area trade. That's all it is. It's an early entry on a trend trade, hoping that the area doesn't hold. And I notice that you get paid. Nope, hold on. Did you go short? Okay, now I'm getting confused. So all long. So there's your long to 61. Stopped you out. And then did you go long? You go long again at 60. Into trouble, is that right? Or is that your stop out at 59? Then you go long at 60, out at trouble, maybe? Oh, add on. So stopped out, jump back in, add on. When it gets above the zone, out at trouble all 6. I gotcha. Just an early entry on a trend trade, right? Can't call it a momentum trade. You don't have momentum. You're fighting the triggers. You're trading directly into trouble. What is it? It's the large chart says up. I sure as hell hope this is where they're going up from. Does that make sense, Wayne? Not saying there's anything wrong with your trade. And this is, man, when you get these wins, you start doing it more, right? When you get these wins, you start taking that more often. And the one thing that I would encourage you guys to analyze is when I break my rules, do I tend to win more than I lose? Or does the dopamine of the winner blind me to the fact that I lose more than I win? For me, it's the dopamine. When I get lucky, man, I get lucky. All right, so I just wanted to get those out of the way. That's the first chart read. So what we're gonna do, guys, is for everybody that's new. Do I have some new people in here? I sure hope so. I do love my new people. For my new people, we're gonna learn to read charts. We're gonna go through 101 this morning, and we're gonna really focus on chart reads. Because chart reads are how you know your rules are met. And your rules are nothing more than a pattern that you'll be able to prove wins more than it loses. It's nothing more than the market doing the exact same thing with the exact same advantages, with the exact same entries, knowing how you're going to exit, guys. Your rules are a flow chart. So we're going to talk about, hey, have a good one, Wayne. Short week next week, man. Monday, Tuesday, that's it. We're going to use a checklist with 3 rules and only 2 charts, guys. If you are on TradingView, it's 3 rules and only 2 charts. If you're on NinjaTrader, it's 3 rules and only 2 charts. We're going to focus on the advantages that your indicators show you. You'll turn those advantages into a trade. Your chart reading will account for about 90% of your day, guys. Successful trading is typically boring. Consistent trading isn't exciting. It is literally doing the same thing because you know that thing wins more than it loses. That's what we call an edge. And when you trade with your edge, the probabilities say you should do all right. You're going to understand through your chart reading where the market is likely to continue. Guys, this is entry areas. I'm going to show you exactly what the market does every day. When the market is in an uptrend, there almost always seems to be a little fight, and then the uptrend continues. When the market is in a downtrend, there almost always seems to be a little fight, and then the downtrend continues. Your chart reading is going to pinpoint right where that fight is most likely to be lost. That's it. That's all it is. An established trend. Understanding where the market is likely to continue. That's where the fight against the trend is most likely to be lost. That's our entry. Where the market is likely to go, using key areas to say, all right, what a great place to get paid. And then understanding where the market is likely to stop. And we call these termination conditions. And termination conditions won't sneak up on you, guys. Termination conditions will be off in the distance. You'll see them. You'll have a recipe to respect them. That's the 90%. So I encourage you guys, learn the rules. Learn your rules. Learn some rules. I don't even care if they're the rules that I give you. But have a plan that says, if this happens, then I'll do that. If this rule is met, then I'll look for that rule. And if that rule is met, then I'll look for my entry. And if my entry rules are met, well, then you can't keep me out of a trade. So I'm going to drop in for NinjaTrader. There's the KISS plan. For TradingView, there's the KISS plan. Until you can write your own plan, this is a great foundation, guys. This plan is a stepping stone in your learning journey. It's designed to teach you how to read indicators. The plan is designed to optimize your chances of success, to give you the highest chance of success as you learn to write your own plan, guys. Through study, simulation, class feedback, and practice, you're going to write a plan that suits your own needs. I don't anticipate anybody in this room is going to stick to the KISS plan because it makes you sit still for 90% of the day. But now you have a plan. Learn the rules. We're going to talk about the rules. We're going to break them down right now. Simulate, practice, get in, get out, move stops, write notes, take pictures, but post in the room. Get feedback. Hey, Mark, this is what I saw. Did I see it correctly? Hey, Mark, I saw this and chose to enter here. Any feedback? Every time you post in the room, you get a private session with me. Every time you post in the room, we'll talk about the good. We'll talk about the challenges the way we did, right? Hey, great trade, Pete, but did you notice that you traded into a termination condition? Awesome victory, Wayne, but did you notice that you broke the rule about waiting for the close on the correct side? It's not a momentum trade. Guys, it's okay. You're going to get both sides of the coin, but it's going to be done to help you become a more consistent trader. And then keep it simple, guys. KISS plan. Keep it simple. Keep it focused. Learn how to make money the easy way before you try to learn to make money every way. You'll be surprised trading doesn't have to be difficult. Post in the room. Track your performance, guys. The second thing I'm going to give you right now, and I'm going to give you the good ones. Where are they? Here we go. There is the Nexgen tracking sheet. That is for TradingView or for NinjaTrader. There is the TV trade journal. That is for TradingView. Your NinjaTrader trade tracking sheet has rules and pictures of rules. It has client trades. It has a place to put your pictures. It has a tracking sheet. The TradingView has the pictures, the rules, a place for your pictures, and a trade tracking sheet, guys. Your job, if you want to get to where you want to be the absolute fastest, is to track your performance. Every time you take a trade, you annotate that chart. This is what I saw. This is what I did. This is why I did it. And every morning, take the 3 to 5 minutes. What did I do yesterday? What worked? What didn't work? What felt easy? What was relaxed? Yesterday, I had some early entries that absolutely kicked my ass. I had to stop. I had to analyze. I had to see where my analysis was failing, and then I had to fix it, guys. And if you go through this every day, you're set up each and every day to do better than you did yesterday. If you take a trade, lose a trade, said, F it, I lost it, I'm just going to go to the next trade, you're not doing the education process. You're not learning how to become a better trader. If you don't know why you lost a trade, post it in the room. Somebody posted yesterday, hey, Mark, what did I do wrong in this trade? It lost. And he showed me the perfect trade, the trade that you can prove wins more than it loses. This is the high probability trend trade for Ninja Trader, guys. It's only 3 rules. Strong triggers, no termination conditions, define your entry. Each rule gives an advantage. Momentum from strong triggers, clear path from no terminations, entry area where the market is most likely to continue. The recipe for a trade is 3 advantages. If you change the recipe, it may not be a trade. These 3 rules only take 2 charts to prove true. There is a large chart. This is a slow chart. It's a very broad stroke of a brush. It's hard to see change on a large chart, and it only takes 1 bar on a large chart. That's it. 1 bar to define direction, momentum, and areas. Your first 2 rules are met on a large chart. Your small chart is a refinement chart. Remember I said every time the market goes down, there's typically a fight? You'll see the fight on the small chart. You'll pinpoint where the fight is most likely to be lost on the small chart. You will enter at that point on the small chart. It'll allow you to reduce risk. It'll allow you to maximize profit potential. But the large chart leads the way because the large chart is the big crowd, the men and women that establish trends, the cool kids that create momentum, the institutional traders that react at areas, guys. The large crowd wins. Your plan is designed to keep you in their good graces. The small crowd create the fight. The small crowd, when the large chart rules are met, typically lose 70 to 80% of the time. Your plan is very deviously entering right where their failure is most imminent. You will be able to call your shots. You will be able to wait for the market. But if you don't take the time to learn the large chart rules, this is like the siren song. They will convince you to make bad choices. Both charts have areas. Areas are horizontal lines on a chart. Areas can create a bounce. Write that down on a piece of paper. Areas can create a bounce. I don't care which chart it's on. There are divergence highs, divergence lows, Fibonacci resistance, Fibonacci support, yellow 1-to-1s. In an uptrend, when the market is trending up, magenta divergence highs can create a bounce down. Fibonacci resistance can create a bounce down. Yellow 1-to-1s can create a bounce down. So anytime the market is trending up, any of these areas will be referred to as resistance. In a downtrend, divergence low can create a bounce up. Fibonacci support can create a bounce up. Yellow 1-to-1s can create a bounce up. So any of these areas will be referred to as support when the market gets to them. Resistance and support. Guys, it's just areas. Horizontal lines are bouncy. And then you're going to see trigger lines. Now, trigger lines do most of the job for you. Trigger lines are small trigger lines, 2 solid lines working together. They're a fast-moving average. Large trigger lines, 2 dashed lines. They're a slow-moving average. When they're green, they're up. When they're red, they're down. We're going to use trigger lines to define strong triggers in rule number 1. You're going to count trigger lines to define termination conditions for rule number 2. And you're going to use the large trigger lines to pinpoint your awesome entries for rule number 3. All you need to know is that these are small and these are large. So we're going to go through and we're going to break down each rule individually. The first hour feels like a lecture. I get it. Guys, the rest of the classroom is dedicated to your questions, to your pictures, to your musings, whatever you need. But let's get focused on momentum, path, and entry. And once you learn momentum and path, you're going to have everything you need to start writing your own plan. Starts with a large chart, starts with strong trigger lines. Strong trigger lines have nothing to do with price bars. Strong trigger lines have absolutely nothing to do with areas. Strong trigger lines is one look in an uptrend, and the background is green. Small triggers have broken above the large triggers. Large triggers must be wide and angled in the direction of the trend. It's that space, that gap right there. Looks like scissors, right? Scissors that are open, ready to cut. Boom, boom, boom. It's the space between the small and large that lets me know that the odds are favorable for the market to continue up. In a downtrend, when the background is red, small triggers are red, large triggers are red, smalls are down and below the large triggers. Large triggers are down, they are wide, and it is the space between the two, my friends. It is the open scissors that lets me know that the odds are favorable for the market to continue down. Odds favorable momentum will push a market. Odds favorable momentum is very difficult to stop. Odds favorable momentum is what we look for to break key areas. And guys, when you have that odds favorable momentum, these tails that you see on the large chart, that's the fight. We're going to pinpoint right where these tails are most likely to form using a smaller, faster chart. Guys, rule number 1 is hard to stop. But if the scissors close, if the small triggers work their way back inside of the large triggers, you have weakness. And when you have weakness, anything could happen up or down. It means that you no longer have a market where you can say the odds are favorable for it to continue in the direction of the trend. There we go right there. We still have separation. Off it goes. Separation for a good push. There's weakness and a big ugly retracement, right? There's weakness and a big retracement. And guys, trigger lines are amazing, and trigger lines define momentum. And trigger lines tell us when areas have the potential to break, but momentum is one rule out of 3. And if I don't have momentum, I'm not even going to look for rule number 2. Let it be like a flow chart. But if I do have momentum, there is the one thing that can kill it, that can make it cease and or desist, and that's a termination condition. Is everybody good with strong triggers? It either is or it is not. That's the easiest rule I ever give. It's either strong on the first bar or it's weak. If it's strong, I go to rule number 2. And if it's weak, I sit on my hands and wait for strength. Guys, termination conditions are Fibonacci-based indicators that can reverse the market, that could reverse the market, that may reverse the market, but are not obligated to reverse the market. Lines on a large chart, resistance or support. This is where the large crowd makes decisions. This is where the people that control the trends and establish the momentum, this is where the buyers buy and the sellers sell. This is where profits are taken. This is where fights happen. This is where decisions are made. So to identify a termination condition, we're going to let the large crowd get there. We're going to let price reach the area. We're going to let price reach the area, guys. That's the first step. Once price reaches the area, it sets off the decision-making process. I don't need price anymore. Now I need trigger lines. I'm going to ask myself, where are my triggers? Price reach resistance? Where are my triggers, guys? If all 4 trigger lines remain below resistance, this is a termination condition. This is an area that has three options. Option one is that it just breaks, and it could. Option two is that it stops the market and creates an untradeable bounce before it breaks. That typically results in a loser. Option three is that that area reverses the market completely. Whoops. First, it's a termination. From that termination, everything rolls and heads down. Guys, that's what we call a strong top. And a termination at a low that reverses the market is what we call a strong bottom. Now, a strong top and bottom is the precursor to the highest probability trend trade you could ever take. A strong top or bottom is rule number one for the second trade on the plan that I give you. But it has to be a termination first, guys. If price reaches the area and no triggers break, sit on your hands and wait for the reaction. Is everybody good with that? This is your 90%. This is you're sitting on your hands and doing nothing. This is the look that says, hey, price reached resistance and my triggers couldn't break. Maybe I shouldn't look for that opportunity. Price reached support, my triggers didn't break. Maybe I'm not interested in taking a short trade. Price reaches resistance, my triggers are below. Why on earth am I hoping that that area breaks? I'll let it break. I'll wait for the reaction. Weakness at a fib, big retracement. Price pulls back, triggers don't all break. Not there. Boom, bang, zing, pow. Over and over, guys. You'll know about them. You'll see them. You have a recipe to respect them. But they do break. It's going to be a quiet class today. I love it. This is what it looks like when support breaks. Price reaches support. All the triggers remain above. Wait for the reaction. It's a termination. Your rules aren't met. If you're following the KISS plan, you do not have a trade into that area. If you are a more seasoned trader, and we've already seen these today, you may choose to take a trade in that area. That's your right. But as a brand new user, just let it be a termination. Sit tight for a little bit. If your small triggers absolutely smash through an area and you have momentum, this is an area with the potential to break. 2 triggers through lets me know that the area has the potential to break. The second trade on the KISS plan revolves around 3 triggers through with momentum. It's more likely to break. This would be a medium probability trend trade, not a high probability trend trade, because it's only potential. An area is considered broken when 4 triggers get through the area. Now it's a clear path. Support becomes resistance. The path remains clear until you hit the next area. In an uptrend, price reaches support. None of the triggers break. I wait for the reaction instead of going short. It keeps me out of a loser. And then the market comes up to resistance. And all my triggers are below, and I sit on my hand and I wait for the reaction there. Because why would I believe it would be any different than the reaction here? I don't have to take that chance. 2 triggers smash through with momentum. The potential is there. 3 triggers get through. Now my rules are met to take a high probability or a medium probability trend trade. But the path is not clear until all 4 triggers break through the area. So here's your cheat sheet. I'm going to drop it in the room. You will never wonder the status of an area. It's either a termination, has the potential to break, but not the best potential, has the potential to break with the best potential for taking a trade, is a clear path. Those are the only options. And guys, rule number 2 isn't the one time that it breaks, it's the 10 times that it doesn't. About 60 to 70% of the time, if you trade into an area with absolutely no triggers through, it's more likely to result in a loser, which means that it removes your advantage. It takes away your edge. You no longer have what you need to feel good about trading into that area. So let's open up a chart. No triggers, no trade. No triggers, no trade. No triggers, no trade. I love it. No momentum, don't bother trying. No momentum, don't bother trying. Weakness, why are you going, right? Small's below, larger up. Now we're starting to get somewhere. Resistance holds. No triggers, no trade. Only 2 triggers. Big untradeable bounce. These were beautiful trades. Look at that tail. That's the fight. You guys can pinpoint where that fight is most likely to happen. We'll put a circle on it, and we'll see if that follows rules when we come back for rules. Only 2 triggers. The area doesn't break. Do you guys see it? Weakness, big ugly retracement. Pretty crazy, right? Weakness, there's a reversal. Only 2 triggers. Only 3 triggers. Man, it's like the market's predictable. It's like you could have expectations based on a very simple recipe. There will be times when your areas are stacked. There will be times where you don't have momentum. There will be times where you can't define an entry. It's 90% of your day, guys. 90% of your day is doing nothing. 90% of your day is sitting on your hands. 90% of your day is saying, I don't have the advantages I need to risk my money. Futures markets trade billions daily, guys. It takes 400 a day. That's it. 400 a day to be a 6-figure trader. You don't have to be the first one in, the last one out. You don't have to be anything other than conscious of the advantages in front of you and have a willingness to sit still when it's time to sit still. The easiest trades you will ever take will have momentum, will have a clear path, and we're going to go define where the fight is most likely to be lost. It'll have momentum, it'll have a clear path, and we're going to go define right where the fight is most likely to be lost. Guys, your entry pattern is so stinking accurate. You will use a limit order and wait for the market to come to you. You will wait for that market and you will buy or sell a pullback. And let me show you exactly what a pullback is. A pullback, whoops, get over here. Remember when I said there's a fight? Where's that big crowd, little crowd? Large crowd says up. Large crowd says clear. Large crowd says strong. There's your fight. There's your pullback. It's that little series of down bars when everything here says up. So you're going to buy or sell that pullback at an area because areas are bouncy. Areas can create a bounce. Fibs can create a bounce. Mid-bands can create a bounce. One-to-ones can create a bounce. But those areas have got to be inside of triggers. They've got to be inside of the large triggers on your small chart. Price returns to large triggers. Regression of the mean. It's a moving average thing. Areas inside of those triggers are where the small crowd's most likely to fail. Anything beyond those triggers is not a part of your trade. It's very specific. So when the large chart says up, when the large chart has momentum, when the large chart has a clear path, your small chart will be absolutely flying to the north. And you're going to have this fear of missing out that says, jump in, jump in, jump in. They're going without you. You'll never get paid. And then the reversal bar happens. And this signals the beginning of the fight, the beginning of the pullback. The reversal bar is not your entry. It's the little loss of momentum that we need to get us back to our entry. So when that reversal bar prints, or even before, look for your triggers. Large, synthetic, where are they? The market's most likely to retrace somewhere from the top line to the bottom line. Most likely, may, could, might, not guaranteed, but that's the most likely outcome. Areas inside of that retracement zone. Fibs, mid-bands, yellow one-to-ones. These define where the market is most likely to bounce, where the small crowd is most likely to fail. Because the large chart is a freight train of emotion to the north side, you're going to activate your limit order just above the highest point of support, and this becomes your entry for the highest probability trend trade if the small crowd gets there. But you're doing it with the understanding that they could go lower, but you don't want to trip over a couple pennies to save a few dollars. And if they go even lower to the bottom of the retracement zone, you're still going to be calm. You're going to be collected. You're going to say, you know what? My advantage is still in place. But if the small crowd pushes beyond those triggers, 4 or 5 ticks, you're no longer in a trade where you have the advantage of rule number 3. The trade is right where the market should not go if this is going to be part of that 70 to 80%. This is what we call the wrong side of the triggers. Initial stops will be placed about 4 to 5 ticks beyond those triggers. Any lines on the wrong side of the triggers are not used for entry because once you get below the area, and this is for new users, KISS plan, you don't know if, when, or where the market may continue up. Advantage lost. In a downtrend, when the large chart says down, when the path is clear, when the momentum is strong, termination still holding. Where was that circle that we put? There we go. Potential to break. Everything down. You're going to call your shots. We're just going to do it together. I hope you guys are good with this. I love a slideshow, but this happened in the live market. Everything says down. Super strong. Potential to break. Everything says down. Super strong. Potential to break. Before I ever get a reversal bar, I can say if I get a reversal bar, the market's most likely to retrace somewhere inside of those triggers. The market's most likely to bounce from the areas inside of those triggers. I know exactly where my trade may come from before the market ever starts up, and the market continues down. And a reversal bar signals the beginning of the pullback. And at the time of the reversal bar, things changed a little bit. Now my areas inside of the triggers are the mid band is the high point, resistance is the low point, and I know exactly where the market shouldn't go if I get filled on this trade. And they come up, and there's my resistance, and they go through it, and they hit the second level of resistance. I would hate to miss that trade. And then they say, uh-oh, we forgot Mark. Let's go get him. And then let's continue down with momentum and the potential to break. Guys, you will call your shots. You'll know exactly where your entries come from. You'll know exactly where your stops belong. And hell, you'll be able to look at a large chart and know exactly where it's likely to go with all those momentum, with all that momentum. What a great place to take profits. And then it does it again, almost like it's getting paid to do it. And down it goes to the next area. Do you guys see it? That's your high probability trend trade. That's your medium probability trend trade. It's just a pattern. First, it's momentum. Then it's at least the potential to break. Then it's a pullback to an area inside of triggers. That was on the 6th of November. This one had momentum and the potential to break and a pullback to an area inside of triggers, and that was from 2021. There's the same look again. That was 2022. And as we move forward now over to TradingView, I'm going to show you something pretty cool. It's going to blow your mind. You're going to be like, oh my gosh, has Nexgen really been around for almost 30 years? Has Nexgen really been teaching trend trades for almost 30 years? Is Mark really about to just give the exact same freaking methodology that Nexgen was teaching live in 2004 because damn it, patterns work? The answer is yes. That's exactly what's going to happen. But first, are there any questions about the high probability trend trade? Guys, as a brand new user, give yourself two options until you get comfortable, until you get good at this, until you feel as though the high probability trend trade is second nature. Let it be pretty simple. Prepare yourself to be bored. Do some historical study. Because when you learn to read your indicators in terms of advantages, when you look at your chart and you say out loud, scare the pets, I have momentum, my path is clear, I can define an entry area, guys, there should be absolutely nothing that keeps you out of that trade. And you will go into every trade with a full understanding that you don't know if it's going to win or lose. Guys, if this pattern wins 70 to 80% of the time, how often is it going to lose? 20 to 30%, right? Guaranteed, if it wins 70 to 80, it's got to lose 20 to 30. Well, the second you forfeit an advantage, you can't expect the same results. Now you're in medium probability. One of your advantages goes away. You look at your charts. I have a clear path. I can define my entry, but the momentum isn't great. I can't put the burden of 70 to 80% on that trade. Now it's medium probability. I'm going to manage it a little more assertively because I know what I'm up against. And guys, if you look at your chart and 66% of your advantages are gone, and you have to say out loud, oh no, this is a low probability scenario, why on earth are you risking your money? Most of you will do this because hope states that it could, right? 1 in a million. So you're saying there's a chance. That's the trader mentality, guys. You control the entry. When you know what's working for you, when you know what's working against you, you decide whether or not you're going to enter that trade. Nobody makes you. You know how aggressively you may need to manage it. Having a plan for entry, having a plan for exit, guys. Great entries create manageable trades. Great entries make it easy to reduce risk. Great entries give you the most room to profit targets. Learn your entries and then go to management. All right, nobody had a question. I love that. Trading view, 3 rules. Again, simplicity. Why are you making it hard? Why are you making trading more than it needs to be? If you have momentum, if there's nothing in the way, you'll find a way. Nice trade, Ron. This is called the chili dog. Good heartbeat in the market. Odds favorable momentum. Away from the decision-making places. Just jump the fudge in. Jump the fudge out. Make your money. Wait for the next trade. What a beautiful trade. Trend trade on TradingView, guys. It's 3 rules. I wish I could give you a big complicated plan, but I can't. I'm not that smart. Just 3 rules, just 2 charts. Big chart, little chart. Large chart leads the way. Guys, on TradingView, it is a 15-minute chart. Do you have any idea how long that is in trading terms? So much can happen in 15 minutes. We're going to let it define direction, momentum, targets, and terminations, guys. We are going to respect the ever-loving snot out of the 15-minute. Your 1-minute chart is your small chart. This is where the fight happens. We're going to pinpoint where the fight is most likely to be lost. We're going to use that as our entry to get in tune with the large chart. You're going to have trigger lines on the 15-minute. You have 1 set, 2 lines, that's it. And they're either up or down. Pretty cool, right? On your 1-minute, that should look familiar to everybody. Smalls above the large, momentum, right? Smalls below the large, momentum. This is your immediate momentum indicator. Green is up, red is down. Some things don't change. You have areas. You have areas on the big chart. You have areas on the small chart. Learn their names, guys. Jerry, what do areas do? They create bounces, right? Whether they are one-to-ones, whether they are divergence highs, whether they are mid bands, whether they are outer bands. Guys, memorize this picture. A divergence high is a loss of momentum. At a high pivot on the large chart, it can be a termination condition. It can be a target. It is not an entry. It says so right there. Same with divergence lows. One-to-ones, magenta or yellow, can be used as targets, termination conditions, or entries, depending on the chart. This is an area to trade from. Same is true with mid bands. So learn that picture. Areas can stop a market. Areas can create a bounce. So let's break down the rules. A trend trade must be trading with the trend. I can't stress that enough. It's not a trend trade if it's not with the trend. Your first rule says that your 15-minute chart is not trading directly into areas. We're going to call that a clear path. Nothing in the way to create a bounce. Your second rule says that your 1 minute is not trading directly into areas. We're going to call that a clear path. 2/3 of your trade is not trading into something solid. 2/3 of your rules say don't trade into something that could stop the market. Pretty simple, right? Your third rule says buy or sell a pullback. There's your fight at an area on the 1 minute, at a zone, at a one-to-one, at a mid-band. There's your list. Not a divergence high or low, not a high volume area line. at a zone, at a one-to-one, at a mid-band, with a close on the weak side of the small triggers. And we're going to talk about what that means. But first, we're going to define direction. On your 15-minute, if your small triggers are up, the trend is up, you should be looking for rules to be met for trend trades long. If the small triggers are down, the trend is down. You should be looking for rules to be met for trend trade short if you are following the KISS plan. It's either up or it's down. Well, Mark, I can't really tell what they're trying to do. Well, then you can't define trend. How could you ever take a trend trade? Rule number 1 says don't trade into something. So from wherever you are going to get in, make sure that on the 15-minute you have room to a target. So if I'm looking for a long trade, holy wow, I better have room to get to that red line. Does that make sense? My direction is up from 45. I have 25 points. 25 points to get back to that treble. That's a live example right now in front of you. But Mark, isn't that a termination condition? Guys, 15-minute charts take forever to do stuff. It could retest that area 3 times and then break it. So if I have room on my large chart, I'll turn my attention to my small chart. Rule number 2 says don't trade directly into areas. Make sure that there's room from your point of entry. There has got to be room before you smack headfirst into a brick wall. Let's go back to the live market. Well, right now I've got all the room in the world, but I don't have rule number 3 met. Rule number 3 says I have to wait for a pullback to an area. Rule number 3 says wait for the fight. Let them pull back to something that creates a bounce. Let them pull back to a zone, to a mid-band, to one-to-ones. Let them get there. This is your brick wall. Price is your tennis ball. Whoops, that's not an arrow. Price is your tennis ball. How could you expect it to bounce before it hit the wall? You can't. It doesn't make sense. But when price gets there, because these 1-minute charts are big, because they are way more poignant than a Renko bar chart, when I get to the area, I don't just jump in. I don't wait with a limit order. Your entry is a reversal bar, an up bar that finishes, both corners of the bar finish above the small triggers. You could call it the correct side because it's on the good side of the trade you're looking to take, but it's also what we call the weak side of the small triggers. When the market is coming down, as long as I am left of the triggers, that market has a chance to continue down. In a market going up, as long as I'm left of those triggers, until I close below, there's really no chance of it going down. Your entry will create a level of patience that is just overwhelming. It'll keep you out of so much mess. Reversals come from the weak side of the triggers. Whether it's the large chart, reversals come from the weak side of the triggers. But we're going to use that concept on a small chart to make sure that we're in on the small chart reversal to get back in line with the large chart. So when the large chart says up, I'm only looking for long trades. When the large chart has room to trouble, I know that I can go look for an entry on my small chart. It's trading all the way up here again, guys. We're anticipating the fight. Small triggers rolling on the small chart lets you know the fight is on. Put a box around the area you want the market to go to. Just like that. And say this is where the market needs to return in order for me to look for a trade. And once the market gets there, not messes around above it, once the market gets there, I need an up bar that closes on the correct side of the triggers. And that is where the market is most likely to reverse and continue with the large chart. That's where the small chart is most likely to bounce to reverse to continue with the large chart. Does that make sense, everybody? It's the same look every time. First it's down, then it's room, then it's a pullback to an area with a down bar. If I do not have a clear path on my 1 minute chart, if there is a zone, if there is a 1-to-1, if there is a mid band, I don't have my rules met. And any trade that I take is based in hope, not rules. Does that make sense? Because the most common mistake that people make is trading directly into 1 minute areas. Gotta respect them. And now we're going to talk about using the large chart trigger lines to help with management a little bit and where price is. Guys, when these triggers are up, when there's room to trouble, where the most current price is in relationship to those triggers is going to set you up for your management. So management starts by that comparison. Where is the most current price? Right here we can see it in relationship to the triggers. It's either going to be left of the triggers, it is going to be right of the triggers, or it's going to be inside of the triggers. Here comes management. If I am left of the triggers, I'm on the strong side of the triggers. This is where we typically get bigger moves. This is where 1 minute areas are more likely to break. If I am right of the triggers, this is the weak side of the triggers. This is where reversals come from. I'm still looking for long trades, but I'm getting paid at trouble on the 1 minute chart. I'm not hoping for home runs. If I'm in transition, man, that's where I'm taking partials and I'm getting break even because it could break. And guys, you may have a trade from the weak side that goes to the transition side that ends up on the strong side in one 15-minute bar. This will help you gauge where you need to be to manage your trades. They didn't make it. There's no room. It's not my money. That's it. Ron just did a cool math thing. Last trade made $137.50 in 15 seconds. Multiply by 4 for 1 minute. That's $550 per minute. Multiply by 60 for an hour. That's $33,000 an hour. That's a pretty good hourly rate, Ron. Now if you could just do that every 15 seconds for the rest of your life, right? So Chariot, let's see what you did. The triggers are up. They're strong. And Chariot says, I've got room. So on a small chart, price breaks above support or resistance. It becomes support, pulls back. You get in on the correct side of the small triggers, but you get in, waited to close above the 1-to-1s. Man, you didn't. It didn't close above the 1-to-1s till here, right, Chariot? I think it's important that you recognize this. There's your 1-to-1s. That didn't close above, right? That closed above, that didn't close above. That traded directly into trouble. And you held it up. So, truth in annotation. Truth in annotation, right? Large chart read is perfect. This isn't for me, Chariot. Traded directly into 1-to-1s. Now let's do this. Why? Large chart was strong, right? Large chart had room. I had a pullback to an area. I chose to break rule 2 based on more advantages than disadvantages. I was prepared to manage. Guys, I'm not the trade police. I don't want to be the trade police, but Chariot, if you trade directly into 1-to-1s, dude, say it. I traded directly into 1-to-1s. I made a decision based on my advantages. I was prepared to manage. And that's not for me, Chariot. That's so you know shit could have gone wrong the exact same way it did right there, right? Does that make sense? Guys, your trades don't pay my bills. My job's to teach you to read indicators, to find consistency. You could have taken that close above, and it would have been just as tight. So I love it. I love the trade. I love leaning on advantages. I love waiting for the pullback, getting to the right side of the triggers. All of it is amazing, right? Trade sheet link. Which one, 10K? You want that one for TradingView that's got some pictures on it? Do you need the plan? Help me out. I'll give you everything. 30 days. I'm not sure what you're asking. That's okay. Oh, the Excel sheet. Got you. Just wanted to make sure. There's one for NinjaTrader. Which one do you need? There's one for TradingView. There you go. And Chariot, I love everything about it, man. I really do. And when I do stuff like this, guys, when I say, hey, Chariot, did you know that you traded into the one-to-ones, not above the one-to-ones? It's so that you know, right? Chariot, did you know that those one-to-ones were resistance because they never broke? Look at that. They already held 1, 2, 3, 4 times before, right? 1, 2, 3, 4 times before they already held. They already told you, no, sir, not going to happen, not going to do it. Don't feel like it's a good idea. You took it on the 5th, right? That's okay. That's your right. I just want to make sure that you saw it. That's all. Papa Grigio, when you're setting your buy stop orders, you're seeing negative profit once your orders are executed. What am I doing wrong? Will you show me a picture of your chart real quick? I want to make sure. So one of the things when that happens, Papa, is up here you'll see an orange D, letting you know that your data is delayed. Will you just show me a quick picture of your chart? You don't have to show me a trade. Let's see if that's what it is. And sometimes it just means you're getting run over. Sometimes it just means that you got in on a trade and the trade went negative against you. That happens sometimes. Can you show me a picture of your chart? Triggers are up. There's a little bit of room to trouble there. There's your pullback to an area. We just need to close above, right? Close above. 69 is where we get back to trouble. Ugh, that's not much room, is it? That's pretty much no room. Oh, just take one real quick. You don't even have to find your screenshots. Just take one real quick. You can even do this. Click the camera right up here. Take a snapshot. Bonk. And copy the link. And just paste it right in the room. That's the fastest way. Does everybody see that there's nowhere to go on the large chart? I don't have any room to make money. Which means I'm not taking a trade from here. I can if I want to. I'm going to choose not to. Now what happens if it closes around 57? Well, then I've got like 12 points to get up to trouble. So this little sideways slide, that works out for me. I hope they slide another 2 or 3 bars. Give me some room, right? But right now, a close would start at 60. That's 8 points. We'll see. You know what's cool is we have gone through rules, both platforms, right? We have given feedback on every chart posted in the room. I have effectively answered every question in the room, with the exception of Papa's still waiting on a picture. So guys, the only thing left for us to do for the rest of the day is watch the NASDAQ over here and see if we can get our rules met for a trend trade. Price breaks below support. Support is now resistance. I can't prairie dog it, right? My only option is that same darn area that I put a box around earlier. Because from right here, I got all the room in the world. How cool is that? We'll see what happens. All right, so what I need you to do for me, Papa, I gotta be able to see the top of it. I need to be able to see this up here, because this is where you're gonna have that orange D, if you have it. What you have going on your chart, let me open that back up. Did you go long? Is that right? Are you waiting for the market to come back to you to enter? I see the long here in the exit. You went long a couple earlier trades. So are you activating limit orders, or was that a target that didn't get hit maybe? This doesn't help us on why you're negative getting into the trade. Here, maybe we can though. 1 second. Dun, 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 dun. We're going to play detective. No, you're good. Check it out. Unless you need a second. So your entry was at 80.25, which is 52. Whoop. So your entry was all the way up here. If the market went down at all in that bar after your entry, you're going to be negative. That's how it works. The only way you wouldn't see a negative number is if it went up directly from 80.25 and never got below that price. Does that make sense? So that's a very real option. Is that you possibly just got some push down. You set, okay, but this is a 1 minute bar. I see what you're saying. I'm going to show you something. So inside of a 1 minute bar, Papa, from your entry, it could have gone down here. Hold on, let me make that smaller for effect. And it could have gone up to here, and it could have gone down to here, and then it could have gone back up to here, and then it could have gone back down to here, and then it could have gone all the way up to there, and finally finished right there. And all of that can happen in a minute, which means just because I get in here doesn't mean that I'm not subject to all of the movement within that bar. Does that make sense? And it's very possible that's what happened. This entire bar is 60 seconds. And in 60 seconds, oh my gosh, you could have so much movement. It could go up, it could go down. All of that can happen in that bar. So inside of this bar, from your point of entry, it did go up all the way to 96 and change, 99, but it finished way down here. Does that make sense? So just because you set the order doesn't mean that it's guaranteed to go up. The same way, do you see that big honking bar over here? How much movement do you suppose happens inside of a bar that big? If you entered right here, shoot, it could go all the way down to here and still finish higher. You could be down thousands of dollars and it could still finish higher. Does that make sense? No. Okay. So let's go to the live market real quick. Right now, this is where this 1 minute bar has been. It has been from the low point of that box to the high point of that box. We have 15 more seconds, Papa. Whoops. Now it's been all the way down to here and all the way up to there. But it's trading inside, right? So if I went long, there we go. That's your whole bar. And now here comes the next minute bar. And it starts off in a tiny little range. And now that 1 minute bar is going up. Here's our range so far. It's gone that high. Now it's gone that high. Now it's gone that high. Oh, but now it's going back down. Nope, now it went higher, and now it's going down. And now it's gone higher and higher. Oh, and now it's going back down. So inside of 1 minute, man, if I took an entry right there in the middle of the bar and went short, I'm in negative numbers. And if I went long, hell, I was even in negative numbers. Does that help with the visual a little bit? So there's a lot that can happen inside of 1 minute. You could be positive, you could be negative, you could be positive, you could be negative. There's our range. All right. And now the next bar started right here, and that's the whole range on it right now. But I still need to see whether or not you're delayed, because it could just be that you're on delayed data. There's our range for the bar now. Does that help a little bit? Sometimes the visuals that make sense to me don't make sense to you. But there's a lot that can happen inside of a 1 minute bar, and it's not uncommon. Let me get to paper trading. If I'm going to do silly stuff, it's not uncommon. I could sell the market right here, and it may go everywhere, right? I could be up, I could be down. Oh, now I'm down money. Now I'm down a lot of money. Let's see if it'll give one push down here. Whoop, now I'm up money. Now I'm up a lot of money. So inside of that one bar, there's 1,000 things that could happen. No areas. Strong side of down triggers. The market goes down. So it's very possible, Papa, that that's what's going on. Is you're getting into a trade, but you're seeing that small chart fluctuation. Look, now it's going up. And all of that is happening inside of this one bar. One of the reasons that waiting for areas for entry pays huge dividends, because in the middle of nowhere, shit, I don't know what's going to happen, right? I don't know if it's going to go up or down. I don't know if it's going to bounce. But if I at least give it some place to bounce, then I can say, all right, the market's made it down. The market hit something solid. And now I can create expectations based on my indicators. But that's a lot. That's from 43 all the way down to 20. That is $460 worth of movement inside of one bar on a minute bar. This one from 61 to 48. Oh my gosh, what is that? 87? What is 87 times 20? I can't even do the math in my head. 87 points times $20 a point. That's $1,700 worth of movement inside of one bar. Does that help, Papa? And then if you'll show me that picture of it up here, we'll see if you're delayed. Because if you're on delayed data, you could take the perfect entry and it'll put your entry like 10 minutes in the past. I hope that was helpful. All right. Are you on the app, Jerry, or are you on the web? Because the desktop app, okay, so open the menu. Let me see if I can open up TradingView. I'm logged in. I never use it. Here we go. Open your menu, click the menu, hamburger icon. Hamburger icon. I'm looking for it. Screeners, calendars, community, notifications, product, help center. Let's try settings. Account settings, active sessions. I'm working on it here. Find the dark theme toggle switch to activate. Oh, or your profile picture. Okay, hold on. So let's click on the profile. There we go. Look at that. Ha ha. Dark theme. I knew that we'd get there. It takes me a second sometimes, Jerry. But that should get you where you need to be. Papa Grigio, you got quiet on me. Just a boy in a man's world, Jerry. Not a trend trade, not a Nexgen dot trade. I love the disclaimers. The counter trend white bar really shouldn't work trade. Was piddling around with breakfast, took a one ticker. So price reaches support, divergence prints, Ron gets in. Ron gets out. So with this look, divergence from an area, price typically makes the reversal bar marker on the large chart is the study that Ron put in. It's counter trend trade. It fights momentum. It fights everything. But Ron took 100 pictures and said, you know what? I can prove this pattern wins more than it loses. I can prove this is a trade that wins more than it loses. Uh-oh, Chris Novak is creeping in on my room. Settings general. App settings. There you go. Dark. Thanks, Chris. I love the dark theme. John got me into that. I love the dark theme. But you could do it, right? You could go to settings. No, that's the wrong one. How did Chris do that? App settings. There we go. There's the light. Ugh, don't like that. There's the dark. Yay, I like that. It's all preference. It's all about the fight. Your indigestion is just extra. Yeah, no kidding. My hair loss. No reason to trade a 20 lot. Are they going to come back to that area that we circled or squared forever ago? Triggers are still up. I still have room to trouble. I'm just waiting. Just come get me. Come get me. Phil, let's see what you did. Then let's take a little break. For KISS trend trades, the zone should be at the edge of price, correct? Not where it is right now. So let's go through it. Good question. Phil, are you here for the answer? Oops, and I missed the one from yesterday. I'll get that one as well. And let's make sure that I answer this one accurately. The zone should be at the edge of price, correct? Not where it is right now. Did you make that up, Phil? Can we agree that this is support right here? That's okay. Can we all agree that in the moment that is support? Price is pulling back to it, it's support. And then when price breaks below it, it becomes resistance. And then when price breaks above it, guess what? It becomes support again. Does that make sense? Oh, no worries, Papa. We'll get you. So until this breaks, it's an area of support. Does that make sense, Phil? And hold on, I've got a good picture for this. I don't know if you got this lesson. Dun, 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 dun. All right, guys, we're going to do a quick lesson on what it means to have an area of support or resistance on TradingView. So here's kind of the same thing, Phil. And then we'll come back and we'll compare your chart to the lesson, if that's cool with you. Nice. So as price comes up to this area is resistance. And guys, if you're on TradingView, give me a Y if that makes sense. Anytime price reaches an area above it, it's resistance. So what happens when resistance breaks and a full body of a bar above? It becomes support. And look how it behaves as support. Pretty cool, right? It's almost like you don't even have to guess. There's a recipe. First, it's resistance. I get the full body of a bar above it. Now it's support. It remains support, creates a bounce. And then it comes back, and this area is support. And it's not until I get a full bar break below that support will become resistance. Does that make sense? Now let's go to the most common problem with new users on TradingView. It broke below support. That's got to be resistance. I can't wait to take this trade. Poppycock. That's not true. Why? Because there wasn't a full bar broken out below it. There was no breakout. This is still support, which means that if the rules are met, use it for a trend trade long. This is still resistance. If the rules are met, use it for a trend trade short. Does that make sense? Took the short, went to support, support never broke, it remained support. Price pulled back to resistance, it's still resistance. I can't go long, there's no room. And sure enough, down it goes. Never broke. If you jumped in short, you got your ass kicked. And there it is again, resistance, 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 resistance. And this is the conversation that I was having with John Novak this morning. 1 minute areas don't get the respect they deserve. And as a result, I'm watching a lot of traders lose a lot of trades, believing that a little peak below is enough to change the whole dynamic of an area. So, all right, let's go through and let's look at what you did. You ready? And then, Phil, would you do me the honor of answering the question? Does that close above small triggers qualify as a pullback to support and close above? Does it fit the rules for a KISS plan? Large chart is up. You have to say yes. And then what is the only challenge on this particular trade? Do you have enough room to get back to that area? Do you have enough room to get back to resistance? We are at support. We are at support. Do you see it? No, it was a pullback to an area. It was a close above. Phil, it was perfect. It was perfect. It was up, it was room, it was pullback, it was close above. Did it work? Yeah, it was prairie dogging below the area. This is what we call a failed trend trade. It's a good look. It just didn't work. And then what happened? Support becomes resistance, right? And resistance holds. And then it comes down and support becomes resistance and support has become resistance. But my triggers are up, right? I've got room up to get back to trouble. If I were going to try a long trade, this is my next area of support with a close above. And guys, there's got to be a point where you ask yourself, not only did this area stop the market, look what your 1 minute chart has done since. Who's excited about a long trade down here? But if it fits the rules, all right, here we go. Watch this. This is where the problems come. Is this area support or is it resistance right now? What do you guys think? It's resistance. So if this little bar peeks its head and closes above small triggers, are you trading directly into resistance? Yes, you are. It's not support yet. It's about to be. But that's where that little prairie dog comes in, right? If it's just a little peak, it's not broken. It's not support because the market broke below it, Phil. That's the only thing. Now the market broke above it. Now we're back to support. It's not close above, Chariot. It's not close above. It's break below. So that closed below, right, Chariot? Do you see it? It's still support. Look at the bounce. Now it broke below. Uh-oh. Let's get a bigger view real quick because this is a great example. Didn't break below, still creates the bounce. That's the prairie dog. That's the account drainer. Now it broke below. Look how it behaved here as perfect resistance. So if we were doing it like in colors, let me do the opacity really light. Support, 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 boom. Now it's resistance. And it just stays resistance. It hasn't changed back. Does that make sense? That's your catalyst for change. I'm telling you guys, this right here is going to keep you out of so much nonsense. Traded directly into resistance. Give me a Y if you see the reaction off of resistance. Give me a Y if you see how that is an account draining phenomenon that is unbelievably avoidable. This is resistance and this is support. Phil, take the picture. Come on now. Resistance, support. That's clearly resistance. What about this one? When you say that's, Phil, I don't have any idea what you're talking about. That's clearly resistance? Is that not clearly support? Nothing's broken through it. Holy shit. Pardon my French. Can we say, oh my gosh, I'm caught in a range between support and resistance? Why don't I let it break away? Why don't I wait for an opportunity that gives me a clear path to get paid? Guys, this is like keys to the kingdom. Does all of that make sense? I love this lesson. I love this lesson. If you entered here, you enter with the understanding that that area is still behaving as resistance. Now you have up, right? You've come to trouble. You've got room to trouble. This is where, this is kind of like Chariots. Chariot says, man, this is support. That's my road bump. There's my close with everything up. I'll give it a shot. But it's not trading from support. It's still right there in an area of resistance. And I know that this frustrates you guys. Breaks, not closes. Breaks. There's your break above, Chariot. This is support. Does that make sense? There's your break above. Now this is support. Guys, this is remedial. This is, and not remedial as in you should know it. This is the one thing that you have to learn. Breakaway changes the dynamic. Breakaway changes the dynamic. And once you learn that, now you know that this is support. Now you know that these triggers are up. Now you know that if it pulls back, guess what? Let's go long with our large chart because the rules are met. I love it. And guys, this is kind of where I was getting at this morning. If you don't learn the very basics, right? If you don't learn the super simple, if you don't learn how to recognize direction, if you don't believe that that is room with up triggers, you miss things. You take trades that aren't really fitting the rules. And one of the things that happens, and guys, I'm so guilty of this, is you create your own version of what you want the rules to be. And Chariot, close above, right? That was your version of what it means to break an area. That was 90% of the room's version of what it means to break an area. So there was some shenanigans, right? Where does the next trade come from? With up triggers, with room to trouble. Can everybody rub their little voodoo doll and hope for a pullback to an area of support with a close above triggers? How about this, Phil? How about you apply the lesson? Let's see your understanding of it. I will, but I know it, right? It's easy for me. Here's the lesson that you need on this one, Phil. You ready? It's support. It's 100% support. Let me show you. F them wicks. Who cares? Get a full body above, right? Get a full body below. That support became resistance right here. Right there, full body below. So can you write a recipe for it? Watch this. I love it. In order for a zone to change its role, or one-to-ones, or mid-band, right? I need to see a full body of a bar on the opposite side. What does that mean? That means that it's support, it's support, it's support. Now I can call it resistance. But let's talk about this, Phil. What's a close on the weak side of the triggers? Let me find a good picture without a lot of distraction. 1 second. Boom, 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 boom. I'm going to find like a really good picture because I love a really good picture. Here, let me go to my pictures. Which one, Paul? The idea of an area breaking? I want to make sure I get you the right lesson. Breaking, okay, I got you. Full body. Remember body. All right, so to define a close on the correct side of the triggers, Phil, here's your study picture. I love this, guys. You guys are making this the best class ever. In order for a bar to close on the correct side, both corners of the bar must be above those small triggers when the bar finishes, right? So I have to be able to count 2 corners above the triggers. If that doesn't happen, it's not a close above the triggers. Does that make sense? Which means you never got to close above the small triggers there. That's what we call an avoidable loss. Awesome. I love it. So, Paul, let's go back to the lesson that you wanted a little clarity on, and let's just go to the picture that we made. Guys, I love making pictures. Did you know that if you keep doing this and typing out what your rules mean and comparing it to a picture, it starts to click and it sits firmly in your brain, and it's harder for you to forget the lesson. So, Paul, in order for a zone to change its role, right, I need to see a full body of the bar. So let's get rid of all these arrows. And I'm going to use colors, Paul. And let me know if this works for you guys. This is an area of support as the market comes into it. Area of support, still an area of support, still an area of support. Does that make sense so far, Paul? No matter what's happening here, this is still support. It is, when I get a full body, an open and a close below that area of support, oops, get over there. Now, it becomes resistance. Even if I struggle with the colors. So it's at that moment that support becomes resistance. So what does that mean? How are we applying this? If I get a little peak above, it's still resistance. It's not a broken area. And I think we watched that happen in the live market just a moment ago, where support became resistance, support became resistance, and look at this, still resistance, still resistance, still support, still support. Now we've got support. Now we've got something to trade from. Uh-oh, and here they come. So now if I get a pullback to this zone is very much acting as resistance. This zone is acting as support, depending on what this bar does. Broke away, turned resistance into support. It is still support because I haven't gotten a breakaway below it. Does that make sense? The body, not the wick, the body. Dude, those wicks will jack with you all day long. Do you see it? Wickville, wick, wick, wickety, wickety, wickety. Body, let the body do it. It's still behaving as support. Right now, it's still support. Do you guys see it? Nope, not going to do it, Phil. If you want to Zell me, I'm just kidding. That's horrible. That's horrible. Here we go. I really do love what I do, guys. I love it when you guys talk to me. When you guys say, Mark, I need a lesson. I need to be better than I am. I need somebody to set me straight on this one concept so I stop making that mistake, so I can be more consistent. Full body. It's support. Amen. Perfect. That's it, Paul. So is that one support or resistance, Paul? On your picture, support or resistance, guys? What do you think? There is no important nuance. So it's resistance. Good job, Papa. It's really not even nuance, is it? If price reaches an area coming up, it's resistance. So it's not even nuance. What it is, Phil, is you have to learn the lesson for when an area is support and when an area is resistance. This is a pullback to an area of support. These are up triggers. That's room to trouble. There's the box that we drew. Now we just need to wait for rules to be met. Do you see how this area of support will now be a resistance? Now, it's okay. You've got to learn the rules. So I'm going to tell a story and then I'm going to take a break. Fridays are for stories, right? I love stories, guys. I love storytelling. It's fun for me. Even if you don't like my stories, I still have a good time with them. This is the KISS plan. This is a plan that nobody in the history of the plan has ever been able to follow it and show me less than 70% winners. Is everybody good with that? That's the premise for the whole story. Nobody in the history of this plan has ever been able to present me lower than 70% winners. Well, I had someone take the challenge. And this was a wonderful human being, a magnificent gentleman. And he sent me an email and he said, Mark, can I talk to you on the phone for a minute? And I said, yes, you can. And he said, respectfully, Mr. Novak, you're full of shit. This plan doesn't work. This plan doesn't do anything that you said it does. I'm getting the ever-loving crap kicked out of me every day following your stupid KISS plan. Has anyone ever felt that way? I've felt that way. So let's go through what happened with this gentleman. And this is a great example right here. Let me take this picture and get it in the middle, and I'm going to show you everything that happened. Mark, my triggers were green. Triggers both green. I have momentum. Rule 1 met. This is my truth. Guys, did he have momentum? No. But that's okay. So let me say something real quick. This particular person in question never posted in the room to make sure he understood the rules. I didn't have one picture from him, not yet. But he took the KISS plan, he watched a couple videos, thought he was going to be a big trading badass. Here's the second mistake that he made. Price got below the fib. My path is clear. Does he have a clear path, my friends? No, this is his truth. So guys, if you're following the KISS plan and you believe that you have momentum and you believe that your path is clear, right? And you keep getting your ass kicked here, you're mad at me. That's fair. I'm okay with that. It doesn't faze me. But if you're not posting in the room, how do I know if you're reading your indicators right? So this is what happened. And this is a true story. We went back and I said, all right, buddy, my friend, compadre, let's work together in the room for a week. Every time you take a trade, I want you to post it in the room and I want you to tell me what you see. And he said, all right. I said, but before we do that, let's do a quick one-on-one session. Let's define strong triggers and make sure that you always know when the triggers are strong. Let's define a termination condition and make sure that you always know that it's the triggers, not price, that define an area's ability to hold. And most importantly, let's make sure you know the difference between a high probability trend trade and a medium probability trend trade because they have very different entry rules. And we spent 5 days in the room and he probably posted about, I don't know, maybe 5 to 7 pictures a day. in the room. And he sent me a few pictures off the side just to make sure, right? I invite you guys to do that all the time. If you really need help, reach out. And then after we cleared up his misconceptions, I said, all right, do me a favor. Go back and trade the KISS plan next week. And now we understand the difference between weak triggers and strong triggers and the potential to break and broken. And let me know how you do. And this was on a Friday, or maybe we even talked on a Saturday. And he went the next week and he traded the KISS plan. And when he traded the KISS plan, what had happened was he got back in touch with me 7 days later. And 7 days later, he was at 93% winners. And I said, that's a pretty good start. Do it again and let me know how it works out. And then 7 days later, talk to me on the Monday. Hey, Mark, last week I did 87% winners. And then the next week, Mark, I did 83% winners because I changed the rules on the second trade a little bit because now I understand them and I'm starting to formulate my own plan. And guys, he disappeared. And as far as I know, he's trading comfortably and professionally. If your truth of a rule doesn't match what the rule actually is, we have to fix it. Both corners of candle not above small triggers. Saved your bacon. This is why this class is worth its weight in gold. Because there's nothing you can do, there's no mistake you can make that I haven't already made. Does that make sense? Guys, I've effed it up every way you will ever F it up. But I've learned how to fix it. And I'll teach you how to fix it. And how much did that one save you, Phil? How much did that one little understanding of what it means to have a close above probably saved you what, $600-700 easily? Paul, how much money is it going to save you to realize that that's resistance and that a break above doesn't constitute support? All right, guys, is this support or resistance here? I love these lessons. It's resistance. So if it peeks its head above, does it fit my rules for a long trade if I'm following the KISS plan? Perfect, Phil. Using the language. Full body below, resistance. I love a full body. Triple C thick, baby. So what is it? It's a pullback to resistance. Thank you, Phil. I try to make it an awesome class. Trading doesn't have to be hard. You just got to figure it out. See how we're inside of the zone? Do you guys see that? No trades in the zone. Your path isn't clear. I was talking to John about this morning. Do you guys remember the old movie My Blue Heaven with Steve Martin? And he was like a gangster that got relocated on and there's this scene where he goes, yeah, I like to use a 22 because you pop it right behind an ear and it just rattles around like Pac-Man. Guys, that is, and that's what I hear when I see this. And I'm looking for the picture that I took. There it is. It's like shooting a 22 into a coffee can, guys. It just rattles around. If you're in that zone, it just rattles around. Your path isn't clear, up or down. Does it mean that there's no trades that you could ever find? Of course not, guys. There's a million ways to use the software. These triggers are aiming down. I'm on the strong side. My path is clear. It pulled back to resistance. The only thing I didn't get was on the good side of these small triggers. I love this stuff. This zone doesn't become resistance until full body below. Now it's all the resistance, right? But I'm on the wrong side of the triggers technically for a trend trade. And guys, as long as you're above these triggers, it's going to have to work a little bit. True story. And if those triggers roll, it's going to work even harder. Yeah, I remember. If you remembered on the Muppets, you're still old. Kermit and Steve Martin dueling banjos. Do you see how the small triggers are trying to roll up? Do you see how price is refusing to go down? Guys, make your small charts big enough to read. When you post in my room, let me see everything. I love this classroom. Do you guys know that I'm a better trader because of this classroom? I trade more effectively because of the lessons in this room. Did you guys know that my plan? Let me see if I can find my trade this morning. I take a lot of pictures. I don't know if you guys knew that. I take a lot of pictures. I'm looking for the one that's annotated with the rules. That's it. Down, shorts only. Room to targets, rule 1 met. Pull back to the area, close below, out of trouble, out of trouble. That's the only trade that I've taken today, guys. That's it. Does it fit the plan? Of course. That's why I took it. Was the guarantee a win? No. But I trade the same thing I teach. 15-minute is up, transition, room to trouble, pulls back to the area, closes above with room to trouble, out of trouble. That's it. Any reason to not get paid when it hits and then maybe hold a second? That would be the only thing. You've got a lot of zones. You got a lot of stuff going on your charts, Phil. I don't know what all the purpley stuff is, right? But that's okay. It made it to the second one from transition. I love getting paid. With AMP, it's easy peasy, man. You want to do one together? Do you need it? You can't see it? Man, that's confusing to me, but I'm not that bright. All right, so check it out. 4 lot. Heck, maybe they'll give us a short trade here. If we get a close below, we'll trade the 4 lot, Phil. Nope, not yet. Here we go. While we wait. Odds favorable momentum. Nothing in the way. Jump the fudge in. Jump the fudge out. Base hit. Base hits pay bills. Right? All right. Can I break rules, Phil, for the lesson? Guys, can I enter the market with the full understanding that the rules aren't met yet? I'm going to put my stop loss $6,000 away. I'm going to put my target $6,000 away. If I'm in a short position, I'm going to take my, why did it not give me stop losses? Hold on. Paper trading. There we go. Oh, no wonder. Duh, I'm so silly. Profit way off in the distance. Stop loss way off in the distance. So it's a 4 lot, Phil. You good with that? With me so far? I'm going to reduce my quantity to a 2 lot. And what I'm going to say is that if price reaches Fibonacci support, I'm going to buy 2 of the contracts that I sold. So now if it hits my target, half of my position comes off. We'll see if we can get it to happen sooner, right? Watch this. If it hits my target, 2 come off. And now I've got 2 left. And let's say I'm like, man, I need to take 1 more off. Buy is the opposite of sell. I put a limit order in. If it hits my target, I've got 1 left. So if we were doing this for real, I'm in the short trade, right? I'm in 3 contracts. Maybe I want to take 1 off at support. Maybe I want to take 1 off at large triggers. Now it's a real trade, guys, just for the record. That was your close below small triggers. Stop loss would go above the pivot where the market should not. I'm on the strong side of triggers. Who knows, maybe a bigger move. But that would be it, right? Pulls back to resistance, never becomes support, close below, triggers down, room to trouble. Does it fit the rules, guys? What do you think? And do you see how all I did was put limit orders in, Phil? So if this is going to be one of the winners, and I'm not telling you guys to trade the way I trade, I drank a lot this morning. If it comes down and hits my first target, I'm in at 83.50, right? I could take one off at 78.50 and say, you know what? Give me $100 real quick. I just want something in my account. Small triggers are down. It's even better, right? Keep pushing. Come on, sellers. Everything says more likely to go down than up, so just go down. Ron, have an amazing weekend, man. Have an amazing weekend. Thank you for being here. If you're not here next week, Merry Christmas. The question is never will it win or lose. The question is, did it fit my rules? Was my plan fulfilled? Did I have the edge? Did I have the advantage? Did I trade with the direction of the triggers? Did I trade with a clear path? Did I trade with a pullback? Did I trade with the close below? Guys, if all of those are true, I'm on simulator. I couldn't care less. I'll either take a loss or I'll take a win. My job is to be consistent on the rules. My job is to do the same thing every time because it produces an edge, because it's provable, because it's recognizable. There we go. There's one target. So fast it didn't even fill it. And it's not filling it, is it? There's your second target. So fast it didn't fill it. Can we buy a couple back? I'm clearly having troubles. There we go. Got my first one. Got my second one. Watch this. Let's see if it goes the distance. Whoa. Oops. Did I go long? I did. I accidentally closed the whole position and went long. Guys, that was your trend trade. If you haven't bought software yet, if you haven't learned the plan yet, what the hell are you doing? Look at it. That was it. There's your targets. And where's the big target from the strong side? At least 40. Ta-da! All right, guys, I'm going to take a break. That was 2 hours straight. Great lessons. Awesome trade, right? Does it fit the rules? Phil, did it fit the rules? Sure looks like it. Did you get paid? Sure looks like it. Was it easy, Phil? Was it effortless? Were you scared? No. It's a beautiful trade. It fits the rules. What'd you make? From 81 to 63. $360 per contract, Phil. Congratulations. That's your trade. The market doesn't know the difference between a micro and a real one, right? We knew where trouble was. Guys, does everybody see that trouble stopped the market? Does everyone see that trouble created a bounce? Chariot, was it you that said, I like to get paid? Hell yeah. That's what we're doing here, right? That's where my brother and I differ. My brother's like, dude, it's strong side. You got room. Hold that trade. F that. Get me out of trouble. Get me out of trouble. I can do anything I want, Jerry. I am the boss of me. Are your rules met? Jerry, what direction are the triggers going? Guys, work with me here. Are they up or down? Down. Do I have room to targets? Yes. Did I get a pullback to resistance? Yes. What do I need? What's the only thing missing? What is the only thing that I don't have? Type it out. You'll remember it better. Did you guys know that if this bar closes above, do you see that? You see the space? In 21 seconds, resistance becomes support. In 21 seconds, 16 seconds, resistance becomes support. But guess what? If it doesn't close above, it's still resistance. There we go. Resistance became support. Now I got to relax and do nothing. Dang it. Son of a gun. Did you guys know that if you just learn the rules, trading isn't hard? If you commit to that concept that either they're met or they're not, either it's support or it's resistance, either the triggers are up or they're down, let it be black and white until you can figure out how to pull your $500 or $600 out of the market. Let it be black and white. Look at how it's bouncing up. Son of a gun, I love this stuff. I'm in that zone, rattling around like Pac-Man. I don't know what's going to happen. Pretty cool, right? All right, I got to walk away for a minute. Rest of the room, guys, if we get rules met, we'll trade. If we don't get rules met, we won't trade. How is that? What does this say? This says momentum down, no clear path. Does everybody see it? Strong triggers, separation, no triggers through support. That's not my trade. That's not my look. That's not the one that's going to pay my bills, not consistently. It could go down. It's going to go down without me. Guys, I'll be back in about 5. hour. Here we go. Last day of the week. I was just talking to my wife and I was like, this classroom is so good. I was like, people are asking questions. People are saying, hey, Mark, this is what I thought it meant. And now I'm getting some clarity and we're already seeing results. And guys, that's what I love about what I do. I firmly believe we can all do this. But we've got to get out of our way. We got to get out of the way of wanting to be right and start focusing on wanting to be consistent, right? Making sure that we understand the rules and being willing to step aside if the rules aren't met. Trina says, Mark, the triggers are down and it's on the strong side and I've got room to targets. And I said, Trina, what a great large chart read. What does that mean? She says, well, that means that when it pulls back to resistance and closes below, I'm going to make money all the way to trouble. And then Trina, you gave some back, right? You actually gave back some. I like the idea of strong side, let's hold for bigger moves, right? Nothing wrong with that. Nothing wrong with that. Here's the cool thing about knowing where these are. So you were up 83.60. So you were up $400 into trouble. Yeah, I got you for a little bit. It might have slipped you. One of the things that I firmly believe is that if I'm up $400, I'm not giving back $400. I won't. You can't make me. There's no freaking way. And I'll do arbitrary stops. And there's people that say, man, that's just ridiculous. Don't do that. But guys, if it's coming down and it hits one-to-ones and it hits a zone, how much are you willing to give back? And there's going to be a time where you're going to say, I don't have anything to hide behind, but I'm willing to give back 100. It can break or it won't, right? And a lot of times I'm like, if it gets below here, my stop's behind the zone. That's a management thing. That's a management thing. I love break even. Break even's cool, and you may get slipped every now and then, and it's a great trade. One of the things that you'll notice is that when there are one-to-ones right at a zone, Trina, there's probably a pretty good bounce coming. It's rare that it doesn't create a bounce. And that would be the nuance that Phil was talking about. Little things that you start to get. This one is going to be on YouTube. And look what it did. Holy crap. Do, do, do. Do, do, do. If you took that short, it didn't work out. Didn't work out. Probably fit the rules. Didn't work out. Not a big loser. Those one-to-ones are powerful at a zone. They really are. You took it, you got beat up. Yep. It fit the rules, Pablo. Triggers were down. 14. You had 8 points before you got to the outer band. It just didn't work. So let's do this. Can we do another lesson? Rules met. Have to take it, right? That was a win. Rules met. Have to take it. Whoops. That was a loss. Lots of momentum at that point for long. And Trina says, hey, dude, Mark, look at those strong triggers. That's going to be hard to fight, right? Trina, is that what you're saying? It's coming from a termination. It's screaming up. And this is one of those things where does that change the fact that the rules were met? It doesn't. So as a new user, I'm on Sim. I'm taking every trade where the rules are met. And guys, I'm going to tell you right now, even with this ass kicking, if you took that one too, you're probably not down money. Can we agree to that? Between the two, you're probably up money, if not break even. Now, here's the challenge. If I choose to not trade when the rules are met, can I have expectations based on taking all of the trades? Guys, if I pick and choose which trades I'll take when the rules are met, how could I possibly have any expectations? Because it's a random distribution of wins and losses. And what happens is you might get a win and a win and a loss and a loss and a win and a win and a win and a loss and a win and a win and a win and a loss. But my guts told me to skip the first two and only take the next two, right? And now I'm 2 losses deep. And then I said, well, shit. I took 2 losses. I'm going to sit on my hands for a couple trades because I'm not feeling confident. Let me take the next one. And that's the next loss. You're like, I knew it. This software sucks. Mark is an asshole. I'm going to sit on my hands for 3 and then I'll take one. And guys, this is why it's got to be consistency as the method. If your rules are met, take the trade. Win, lose, or draw. But when you start letting your opinion override your rules, there's a chance that you're only going to pick the losers, right? There's also a chance that you'll only pick the winners. But why not just be consistent, right? Why not do the same thing every time? Why not say, okay, this is the pattern, and this pattern typically wins 70 to 80% of the time. I don't want to do anything different, ever. I don't want to mess up my probabilities. I don't want to mess up the likelihood of success. I don't want to use my opinion and hope that it's right. If you're married, guys, you know your opinion isn't right. Why do you trust it in trading? So, good lesson. Good lesson. This was support. That was your prairie dog. Do you guys see it? Full body. Resistance becomes support. Not a break below support. There's your break below support. Pulls back as resistance. That was the prairie dog. That was hoping that that area breaks, right? And now there's just nowhere to go. Hopefully you're like, okay, that's not my trade anyway, even with the triggers down, because an outer band is an area that can stop the market. But you guys see how if you took that one, you are in 32 flavors of nervous? And it comes back to the very basic lessons. It always comes back to the very basic lessons. If I have a termination condition, I'm less likely to win that trade than I am to lose it. If I have momentum and 3 triggers through, if I'm from a strong bottom, the plan says give it a chance. If I'm not from a strong bottom, the plan says don't do it. It's less likely to win. If divergence prints, it's less likely to win. If it's strong triggers and 4 triggers through, and you lose the trade, guess what? It's a cost of doing business. There's 2 costs of business in a row. Hate it when that happens. But that's okay. Because that one had momentum and path. And that one put some money in the bank. So, consistency. You guys should go study Mark Douglas over the weekend. Full bar above the zone makes it support. Prairie dog. Worked out for you, didn't it, Paul? Oh, you know what? That is a full, isn't it? I didn't see that. Paul, I missed it. Someone yesterday said that if you make a mistake more than once, it's a choice. Paul, I didn't see the space between the two because I'm old. You did. You took it, and it was nice. Beautiful trade. Beautiful trade. Here's the cool thing. If you waited for the full bar below, you still had time to take a little snapback. But great, good eye, Paul. You got me on that one. Man, I messed that one up. Am I not? Oh, I'm not, Jerry. This is what happens when you teach. You crash Ninja Trader so many times that you don't notice when they don't save. Thank you for that, Jerry. I love that, Paul. Soon the student will become the teacher. Nicely done. Look at that exit. Beautiful exit. Beautiful exit. Absolutely. If it was support, you were trading directly into support. Does that make sense? When it breaks above, it becomes support. But check out what happened here. You do get a full bar break below. Do you see it? And then it snaps back up. It's resistance now, isn't it, Paul? So if you're in the trade, that feels good. If you take that bar down, fits the rules. I got in as a mistake, but that mistake rectified itself in the next two bars. And I love your trade because I didn't see that tiny little gap in there either. That was wafer thin. Nice trade, Paul. But that's the thing. Here it becomes resistance again. Here it pulls back to resistance. There it is below the triggers. That fits. Boo, down it goes. Well, if that little space wasn't there, then this was your bar, right where you got in. And when it wasn't, then the white bar was your bar. Break below, pull back, break down. Does that make sense? Same price all the way across. It's a beautiful trade, Paul. They are zones. That's one tick wide. Sometimes you can make a judgment call. Remember that this room is taught in the very beginning to be so black and white. There's no misconception. And then what happens? There we go. That looks better, doesn't it, Jerry? And then what happens is you start looking a little bit. So pulls back to resistance. It's still resistance, isn't it? Triggers are still down. Let's see if it continues to behave as resistance for a little bit. There's the pullback. There's the first close below right there at resistance, right? Could you be in this trade? Stop above the pivot high? Target where? Outer band, I suppose, would be a good target, which puts you right about at the mid band with the triggers down from the weak side of the triggers, pull back to resistance, close below. Does it qualify? Does it fit? Is it a trade? I feel like it fits the rules. What do you guys think? I'm in late. I could have been in 7 points higher, but I feel like it fits. Support turns into resistance, pulls back to resistance, never breaks above. Close below the small triggers at resistance. Room to trouble. There's an outer band down there. Am I missing anything, guys, or am I following my plan? Does it guarantee a winner? No. Does it fit the plan? Yes. If it fits my plan, I'm obligated to take it. What else do we see? Trina, you mentioned strong triggers earlier. I've got strong triggers down, don't I? I feel like I do. That's probably making me feel good. But again, we're in the zone, which is a little rattly, right? Pac-Man. It's leaning down, but it's the weak side. It's leaning down, but it is that Pac-Man thing. It may come get us. We'll see. I don't know. I'm not going to worry about it. It either does or doesn't. Couldn't care less. I think it freaks people out when I don't panic in trades. I know where the market shouldn't go. I've got my stop there. And as long as it doesn't get there, I'll be in the trade. Would have been a lot less risk if I took the first entry. But you know what? Sometimes you're not there for the first entry. And if you choose to take the later entry, you have to accept a little extra risk, right? It's still behaving as resistance. You're in a trade on the ES? All right. I hope it works. I'm rooting for you. Looks very similar, doesn't it? I don't see any areas though. Oh, there's your pullback. There's your close below. Going sideways. I like it, right? Oh no. Oh no. Oh, whoo. Guys, if you watch that money go up and down, it'll drive you nuts. It'll drive you nuts. Just going to see what happens, right? We'll come back. Maybe we get paid. Look at that. S&P. Larger up, smaller down, mid bands there, one-to-ones there. Here a little, there a little, everywhere a little. We'll see what happens. Termination condition for the win. All right, let's see what we have. I don't know what that last picture is. Let's look at the first two though. 15-minute price outside of triggers, triggers up, pull back to the area, close above. Out at trouble, rat. Traded into trouble. Made the choice to trade into trouble. Kept your stop in the right spot. Nice trade. Did you see the trouble? Were you ready to manage it if it did the same thing here? That would be my only question. Man, are you ready to manage? Triggers up, pull back to the area, close above, out at trouble. I mean, heck fire, big rat. Do you remember in the not too distant past where you found yourself looking for every trade and every move and every in and every out and every tick? And man, you've just gone mellow. Let me trade with the large chart. Let me make sure I have room. Oh, those butt heads tapped out, didn't they? They got us. Little stop run. That's it. One of the reasons, right? Weak side, it tried. It still may be a short. It's calmed you down a lot. I love that. It's calmed me down a lot. Now, if your first two trades were both losers, I know that's a little stressful. It's only 11:30 a.m., guys. There's a lot of trading left. There is a lot of trading left. Consistency of method. It's easy to say from where I'm sitting, right? I've been there. I've studied it. I believe it. Consistency of method. This price is trash. You're done. I love it. I like you guys that exercise your right to say that. The market's not doing what I need it to do. I'm not going to try to trade it. The market's not giving me a clear path. I'm not going to trade it. Thanks, Jerry. Go Pats. Yeah. Go Texans in my room, mister. Have a great weekend, man. I hope it's awesome for you. This is one of my favorites right here. When you stop expecting to win every trade, it's funny how you start winning most of your trades. When you don't care about the result, but you care about the execution of the method. And guys, it takes a lot of trust to not care about the result, right? It takes a lot of trust to be willing to get stopped out of a trade that you think in your brain that you've already decided should win. When you believe you don't know what's going to happen, or when you believe you know what's going to happen, you set yourself up for failure, guys. You create the emotional pain by creating an expectation for a trade. When you believe that you're not in control, it makes it much easier, makes it so much easier to accept. The market, have you guys ever noticed when you close TradingView, it gives you a message? I love it. And how's that for timely? Weak traders focus on results, strong traders focus on process. I didn't program that in, guy. That's TradingView saying, hey, here is an absolute in the trading world. Weak traders focus on results. Guess what? We're trying to go up now. My favorite one is that when you close it, has anyone ever seen the one that says the market doesn't care about your position? That is probably my all-time favorite. I still smile every time I see it. The market doesn't care about your position. The market doesn't know you exist. The market doesn't know if you're going long or short. The market doesn't know if your 3 or 4 little contracts are there to pay for rent or mortgage, or if you're trying to get a new car with your winnings. The market doesn't know. The market doesn't care. Couldn't care less. So it's easier to just go with the market. What would you guys like to talk about? This is my favorite "you're not in control" picture. If Ron were here, he would scream Norbert. I want you to think about the people that are in control, how much money they have at their disposal. These are the people that when they lose $10, $20, $30,000, they don't bat an eye because there's so much cash behind it that it doesn't matter. It's a normal part of a trading process. They're the sharks, guys. They're the apex predators. They set the tone. Our job as little individual traders is to be a remora, to let this guy say we're going this direction, we're going there fast, there's nothing in the way. Why don't you come along and just take a little bit about of what I'm producing? And I like just taking a moment and believing that I'm not in charge. All right, down, weak side, room to trouble, close below, entry. It tried to go, didn't it, Trina? It tried to do everything your indicator said that it wanted to do. And then it just didn't. And then it just didn't go. Did you do anything wrong? I don't see anything wrong with the picture. I don't see any mistakes on this chart. It just didn't work. And this is where people say, well, why didn't it work? Are you guys ready for the cold hard truth? For the keep you up at night and make you cry truth? Right here, Trina, someone with more money than you'll ever see in your life said, nope, I want it to go up. That's it. That's the only reason you lost this trade, because somebody made it go up, because more people wanted it to go up than down. That's it. That's all it is. You can't control that. You can't call somebody, hey, what are you going to do? So you trade the same rules every time. The bigger shark, right? Well, the bigger shark said down. We didn't see that great white looming in the darkness, did we? We're hanging out with the blacktail reef. We're like, yeah, things are good. I'm gonna go grab me a little tuna. And then the great white says, I'm gonna breach up and grab a seal. You're in my way. And they got it. It happens. Great trade, Trina. Great trade, Trina. Am I the only one that like makes up stories on what I think the market's doing and the people in charge? I've got a story for everything. Buyers and sellers and fights and angry people and happy people, and I don't know, it just makes me happy. Makes me happy. It looked like it might get there. It did, didn't it? Close below, room to trouble. 15 down. Transition. Reduce risk. I like this. So it pulls back, gives a new failure point. Reduce risk. Nicely done. This is perfect. This is perfect, Phil. You take the first entry, and then the buyers try again and fail. So you reduce risk. I love that. And then the buyers are trying again, or the sellers are trying again. And it failed, didn't it? It just didn't work. What are those dots? What do those dots represent, Phil? Because you traded right into them and they held. I'm just wondering. That's the prior 15-minute close. All right. I'm assuming that doesn't fit into your plan because you put a target way below it. How does that affect your rules? Okay. But how does it affect your rules? Situational awareness means that I see the hot blonde in the bikini top in the Ferrari next to me, but following my rules means that I stop for the red light instead of staring at her, right? If it doesn't help, why do you have it? What does the situational awareness do for you? Just stuff to think about, right? And Phil, there is a way. You're coming in, they tried, they failed, they broke above, and they pulled right back to the top, right? Supply and demand is what that is. But that happens everywhere, always. It happened again at the bottom. And it happened right there. Holy shit. That's supply and demand, is exactly what that is. And it held. But how many times has it not held? Does it create an advantage? Does it create an advantage? That's the biggest thing for me. Is that the really long ones make you nervous? Just too much risk? And that's okay. I'm gonna tell you a secret. Phil, lean into your computer speakers real quick, if you would. You don't have to take a trade if you're not comfortable. You just don't have to. If you're like, holy crap, this is $800 a risk, I'm never going to be able to manage this effectively because it makes me nervous. It's probably better not to take the trade. Wouldn't you agree? And then you get into well, Mark says you got to take them all, right? You got to take them all until you trust the plan. You've got to take them all until you trust the plan. That's what simulators for, guys. That's what simulator is for. Until this bar finishes, these triggers aren't up yet, no matter what it says. I'm not saying go short, right? But until this bar closes, these triggers aren't up. They haven't officially changed direction. Which means that I pulled back to resistance, but here is support. some stuff has to happen before I take a trade. What did they want? They wanted the higher level. They got it. Let's see what they do now. But if you're not cool with it, don't take it. That's my favorite part about trading is nobody's got a knife to my throat saying, Mark, break your rules. Mark, risk more money than you're comfortable with. Did you guys know that you'll always know where your risk is when you get into a trade? Confidence seems to indicate something. It does, doesn't it? Confidence is a huge tell. That's why I show this picture every morning, hoping somebody listens. Ask yourself what worked and what didn't. What keeps you relaxed and what makes you nervous? When you break your rules, does anyone else feel nervous when they break their rules? Does anyone else move stops too soon when they break their rules? Does anybody put targets and change them 55 times when you break your rules? Guys, your brain knows that you broke rules. Your brain knows that you don't have an advantage. That's your body saying, oh shit, we're messing up. Let's try and save ourselves. But that little dude on your shoulder, that little hope monster says, but don't exit. You know it's wrong. Don't exit. What if it wins? But man, move your stops, move your targets, change your plan. You're not even trading a plan. F it. Sure hope it goes. That's day trading. You'll know when you're doing right and you'll know when you're doing wrong, guys. You'll know when it's easy. You'll know. Support. Don't trade into it. How easy is that? But my brain said it would go down. You guys remember this guy? Hold on. You guys remember this from cartoons? If you're old enough to remember cartoons. Where is it? One on each shoulder, right? Phil, don't break your rules. Phil, what if it breaks? Phil, you don't have a clear path. But Phil, think of all the riches. All you got to do is take the trade. Right? Am I the only one that goes back and thinks about this stuff? That's it. This is the trader. This is your rules. Thomas, you know what's right. Break your rules. You might get rich. Shouldn't be nervous at all. Use the micros. Start with the 3 micro scale. See, Big Rat, can I disagree with you respectfully on that? Your pattern doesn't know if it's big or small. Your pattern doesn't know. Trust the rules, guys. If you really trust your rules, if you really believe beyond the shadow of a doubt because of your study, oh, here goes Mark with all this stupid stuff again. If you believe that this pattern wins more than it loses, does it matter if it's a 1 lot or a 5 lot? Does it matter if it's a micro or a big one? Because if the micro makes you feel better, you're focused on the money, not the process, right? If the micro makes you feel better, you're focused on the money, not the process. If you won't enter the market on a big contract, but you will on a micro, you don't trust your plan yet. That's okay. It takes a while to trust a plan. I'll be here Monday and Tuesday, Cav. And I know that there's a mental thing that comes in with these numbers, right? But once you trust your plan, once you believe that what you have is solid gold and it wins more than it loses, it has nothing to do with contract count. It has nothing to do with big versus little, micros versus regular, $10 versus $100. All it has to do is with the process. You only have a $2,000 buffer. You can't trade standards on a $2,000 buffer. Well, if you're risking $1,000, that's probably too much, right? Absolutely. And I'm assuming that's prop firm, right? You've got a $2,000 buffer. It happens. It's the same conversation that I had with my brother. If you're an Apex trader And guys, please understand, and I know this is being recorded, I'm not speaking ill of Apex in any capacity. But if this is the perfect short, and I shouldn't take money until here, based on everything, and that's not the case, you start getting paid early, and you start trailing stops for absolutely no reason because you don't want to F up your trailing drawdown. Has anyone done that on one of those trailing drawdown prop firms? You're like, every one of my indicators says big move, but I can't risk to give back $300 because it F's up my trailing drawdown. Am I the only one? I'm the only person? Guys, that's one of the reasons, and man, I'll scream it from the mountaintop, even though I'm a part of it. End of day drawdowns, guys, is freaking amazing. And closed equity drawdowns. You can hold for the big move. You can take partial profits. You can go break even, and it doesn't count against you. That is my favorite thing about Nexgen Pro Trader funding. And I've started, well, I don't know if it's going to let me log in without, I don't have my credentials. Shoot, dang heck. I've got 2 accounts. I've got one that we're qualifying together as a classroom. And then I've got one that is in its semi-live stage. And all I do is trade trend trades with it. But it lets me hold for bigger moves. My triggers are up. My path is clear. Pull back to a mid band. Broke below it. I want to be aware, right? If it breaks below, support becomes resistance. Now, a mid band is a moving average, and I'm still working on that concept for a mid band. Still working on that concept for a mid band. But I can't trade from a mid band if I'm below the mid band, right? Isn't that how that works? Man, what a great class. Yep. And Phil, like I'm saying, the jury's still out on that one because this is a moving average, and I'm wondering if there needs to be wiggle room. But there's no room up now because of the outer band. Can't go short because my triggers are up. There you go, 10K. Hey, Sergio, have a good one, man. I hope the weather's okay for you down there in the tropics. I'm so jealous. My brother sends me pictures all the time of Sarasota weather. Just makes my heart sad. I'm so jealous. Man, I love today's classroom. I'm going to tell you that right now. You guys bringing the questions forward, I love it. Don't trade into it. So, Paul, what chart are we talking about? Big chart or little chart? Actually, it doesn't matter. Don't trade into it. It can stop a market. If it's in front of you, make sure you have room. That's it. Don't overthink it. If it's in front of you, make sure you have room. Where is... And if you need to know which areas you shouldn't trade into, if you're like, just get me a list, Mark. Get me a list of the areas that I shouldn't trade directly into because it breaks my rules. There you go. There you go. I don't have a full bar. It's a moving average. I don't have a rule for an outer band. I've got it for solid areas that stay still, that are decisive bumps in the road, right? Your outer band moves all day long. Your mid band moves all day long. That's why I'm not even sure how I feel about the mid band. I'm gonna have to go back and do some study. Remember when I said that if the bar doesn't finish up, those triggers will never go up? Give me a Y if you remember that conversation. If this bar doesn't finish up, those triggers will never go up. They didn't, did they? They're still down. Gotcha, Paul. Thank you for that. Paul, you're making the classroom better when you do stuff like that. True story. But Trina, it is flat looking, right? It is flat looking. That's decidedly up, right? 100%. Trina, that's decidedly down 100%, right? Has it gone decidedly up yet? Here's where we go gray. It's still down. It's a 15-minute bar. So it's still down. Now, Trina, let's go to the other extreme. Let's go to the other extreme. No, there are no buts. What if it looks like this? What if it's flat and flat and flat and flat? Hard to define a trend, right? Flat, no space. It's still down. Still down, always was. So Trina, if I get like a couple bars worth where I can't for the life of me figure out what's going on, that's cool. So if you can't tell, Trina, does it make sense to go with the immediate momentum? Does it make sense to go with the chart that is pushing hard in that direction? If I'm going to take a chance, sorry, I had to reload real quick. If I'm going to take a chance on these triggers, I'm going to err on the side of the immediate momentum. Which means if you got to close below the small triggers here, assuming there was room, but there won't be by the time you get it, you could go short. Because if it goes down, awesome. I definitely wouldn't go long, because if the market goes down, those will have never gone long. They will have never turned up. We have 7.5 minutes, Trina, before we know whether or not these are going to be up triggers or continue to be down triggers. So I'm going to lean on what they already are, not what they could become. Does that make sense? And I'm asking if it makes sense because honestly, some of this stuff I got to work through on my own. You guys ask great questions that I don't have definitive answers for. So I'll give you my thoughts on it in the moment. Just because I give you thoughts doesn't mean that it's a rule. Your rules are clear. Your rules are with direction, nothing in the way. This zone turns into resistance. 100%, Phil, 100% turns into resistance. And now it's support again. You're welcome. You got that lesson, man. Good job. Good job. And there it became support again, right? So now, Trina, I've got support that became resistance, that became support. These triggers say up, but I'm on the weak side. It'd have to do some work. I've got 6 minutes. This is where I might say to myself, shit, I got 6 minutes. I'm going to go do something for 6 minutes. I'll come back and see what the large crowd wants to tell me because they can't break this zone. They can't break this zone. I don't have to make decisions right in the middle of it. This is where we falter. I sure hope it does what I want it to do. Does everybody see that? For the last 2.5 hours, they haven't gotten above resistance. They haven't made it below support. These haven't changed their role since the giant spike. Do you want to take a trade from the middle with flat triggers hoping that it goes to resistance? Do you want to take a trade from the middle with flat triggers hoping it's on its way back down to support? I say play your I'm in charge, right? I'm in charge. Chart Prime, 10K. Chart Prime is about $50 a month. There's links to it from the website. Gives you supply and demand, support and resistance. There are free ones. And guys, I mean, this is your business. Flux Chart does support and resistance. Algo Alpha does supply and demand. Alpha, sorry. But I'm using on my charts Chart Prime. Which is these bad boys. And after the 20%, it's about $50. You don't need Plus. Pro is more than enough. They do a 7-day trial if you want. I couldn't imagine trading without them, to be honest with you. I'm at that point in my trading where it is 100% a crutch for me. These things are too good. They are too good. This is my Fibonacci. I feel about these the way I feel about Fibonacci, because look what Fibonacci does. Guys, look at that. Crude oil's caught in a range too. Does it feel like the Friday before Christmas week to you guys? You guys know that the market's going to thin out next week, right? That everybody that's good at this is going to spend time with their families, and everybody that's learning it has an opportunity to do a lot of market replay, a lot of playback, a lot of historical study, a lot of picture taking. This is the one thing. Well, I say the one thing, but I think there's a million things that we do as students that don't serve us. If all I do is take trades and hope to become better, that's no different than like, okay, I'm just going to play 18 holes of golf every day until I'm a PGA pro. It doesn't work that way, right? But what if you took 20 pictures? If price reaches resistance, triggers don't break, no trades into this area. Termination, rule 2 not met. Does anyone feel like they could take that picture 25 times and not have a pretty good grasp of termination conditions? Because you've literally written out the recipe for what it means to stay calm. Watch this. When 4 triggers break support, the path is clear, rule 2 met, until you reach the next area. I know exactly what it takes to have a clear path. There's your entry. Has anyone other than me done this? Smalls below large, all red, space, rule 1 met. So I had momentum and path. This tail is the fight on the small chart. Go see if it was, hold it, a pullback to an area inside of triggers. I had momentum, I described it. I had a clear path, I described it. I know that tail is the fight. Let me put a big ugly circle around it. Let me scroll back and let's see what it looks like. Well, there it is right there. I'll be damned. Right back to the area inside of triggers. Not one trade taken, but I've described my rules for momentum. I've described my rules for terminations. I've described my rules for entry. I've gone through the process, not the results, and it'll make me a better trader. Still down, right, Trina? Pretty cool, right? So glad I didn't go long. So glad I didn't go long. Might not have worked out for me. And short didn't have room. So, guys, that's it for me. I can't thank you enough for being here.